Good morning, ladies and gentlemen. The volatility in global equity markets, the painful times on the Lal Street, and the completely unpredictable life in the world of equities continues unabated as far as investors, traders, strategists, and fund managers are concerned. These are painful times, these are exciting times, and these are times when long term wealth can be created by doing little or no effort at all, provided you have the time and the understanding of how to deal with equities. Time is something which is of your own making, understanding is something that we can provide. I am your host Shail Bhatnagar, and now I am in conversation with Mr. Mayuresh Joshi, Director and Head of Equity Research at William O'Neill, India. Namaste Mayuresh ji, and a very warm welcome to you. What a pleasure to host you after so many months. I hope life has been exciting, and the fact that now you are clean shaven, I am hoping that the markets have bottomed out. Welcome.
Morning, Shel, sir. It's always a pleasure to be on your show. Yes, I think markets have been very volatile, and I hope my clean shave probably helps the market bottom out.
Okay, wonderful. Of course, the pains that we are facing are well known. Two largest economies, US and China, are battling each other for global economic, political, and military supremacy. And as a result, everybody is in pain because of this tariff war. We have corrected substantially because of overvaluation earlier, and now, of course, this pain that has been riddling us across the board. How do you see now sentiment at Dalal Street? There is a rate cut that has happened today. Oil is at a 4-year low, which is a good point. And of course, we are headed into the fourth quarter.
So again, Shel, sir, I think a combination of these factors has created a dent as far as equity markets are concerned. And again, I think if you have some element of a forward-looking element as far as tariffs are concerned, and looking at how Trump administration statements on policy tariffs are. They are largely expecting this that a lot of economies will come to the negotiating table
Yes.
and start negotiating hard and fast with the US administration. Even yesterday's press conference, he was pretty clear that the EU probably buys off a large part of the oil and gas, which will probably reduce the entire 350 billion deficit that the EU Union has with the United States. So he's made his objectives very clear. EU, China has hit back with reciprocating tariffs as we speak. And therefore, a solution to this in terms of getting back on the negotiating table is what the markets are hoping for. So that's the base case scenario that the markets are presuming as far as tariffs are concerned. Now, if this probably continues in a longevity fashion, both in terms of timeline and expected tariffs continuing at the rate and pace at which they are expected to, this obviously creates a dent in terms of not just how the US will probably grow, a large chance that US might actually slip into recession. But other economies, including China, including the EU, and other economies which have got hit hard by tariffs, will start looking out for other markets to probably dump their goods. There is also hope that there will be the currency devaluation that all of us were not hoping for might actually translate if this continues. And this dampens global growth as well. So I think these factors are largely getting reflected in terms of equity market, which is the biggest parameter of risk as we speak. And therefore, from a global perspective, I think this is the biggest fear that the markets probably have. From a domestic perspective, as you speak, we've just seen a 25 bips cut. We've seen GDP getting slashed by only 20 bips as we speak at 6.5%. And inflation expected to come down at 4% with liquidity in the system at 1.4 lakh crores. So all the macro parameters that we are looking at from a domestic standpoint are very robust. They are indicating that all the macro elements are probably in place. And that brings us to the micro element as far as corporate earnings are concerned. Q4 expected to be largely weak. But as we head
Yes.
into the first half, with the tax cuts that have got announced, with expectations of urban consumption going higher, with expectations of normalized monsoon, rural consumption expected to come back, the RBI governor also posted that the Rabi output has been extremely encouraging, both as far as wheat and pulses are concerned. And therefore, I think corporate earnings should largely bottom out in the first
Right.
half and have a roaring comeback in the second half, which probably then means India stands to be better placed than the rest of the globe. But global uncertainties might just drag the equity markets down. for a variety of reasons, as we explained.
Right. So, this is the broad picture, ladies and gentlemen. One interesting thing, Mayuresh, we've realized is that the rupee is the least hit
Yeah.
in this current crisis, and two, the Indian markets have been the most resilient across the world. They have fallen the least. So, this can be interpreted in two ways. We were down from September onwards till March. तो वही वाली बात है, मरे हुए को कोई कितना मारेगा. That could be one. Second is that smart people like you are reading uh, many positives in the fight that is happening between China and US, which might, in the medium term, improve the economic prospects of our country. Are you in sync with this thought?
Oh, absolutely, sir. And in fact, I think if you just have a construct in terms of why India as a consuming economy might actually fare better than the rest of the globe, because we are not largely controlled by a lot of the commodity-driven economies in the emerging pack, which are dependent on exports. So whether that's Brazil, to a large extent, Vietnam, to a large extent, Indonesia, as well as China. So China is having its own sweet problems in terms of domestic consumption as well. And therefore, if you put this construct in terms of a large part of our manufacturing, which probably happens, is consumed within the country itself. And that is a huge plus as we speak. Again, I think a combination of macros with a lot of triggers for the micro front lead us to believe that domestic consumption might actually continue growing at a decent pace compared to the rest of the globe, without inflationary pressures, without pressures on liquidity. And therefore, I think a couple of these parameters will help us stand out compared to the rest of the globe. Obviously, I think India is also doing the smart thing, Shelser, in terms of negotiating with the US. We have not levied
Yes,
reciprocal tariffs.
correct.
And therefore, it's a smart strategy in terms of probably assuming that it's a give and take on certain aspects. We are trying to negotiate hard with the UK as far as the trade agreement is concerned, with Australia as far as the trade agreement is concerned. And therefore, we are keeping our optionalities open as far as the export oriented sector is concerned, X services. So I think we are better placed as we speak compared to the rest of the world.
Okay. Now, ladies and gentlemen, the broad thought process has been set by Mayuresh. We are relatively better off than the rest of the world. We have corrected substantially. Oil, our biggest import. You would be surprised to know India imports oil to the extent of almost $140 billion a year. If there is a 10, 12%, 15% drop in oil prices, you can translate that into the benefits to the country. And this is somewhat similar to the potential losses that we might face on the export front. So, the balance sheet of the nation is net neutral. Oil prices fall is a definitive gain. The loss from potential tariff hikes is potential. So, we look at a positive from the oil side and a potential negative from the export side. Now, be that as it may. Mayuresh ji, what is your equity strategy at this point of time? How do you deploy fresh money? Are you looking at the domestic part of the Indian economy, given the price cuts that are likely to happen in interest costs, given the benefit that has been given in the budget, and more importantly, improvement in quarterly earnings, mainly because of a low base? How do you navigate?
So, Shelter, a combination of these factors, and you're absolutely right. I think we are focusing on domestic oriented sectors from the beginning of this calendar year because what we perceived was there is a huge overhang in terms of Trump's policies and tariff impositions. And we've seen that in the first term as well. And the markets react probably to his announcements as he does it whenever he does that. And therefore, I think the domestic ecosystem as we speak seems to be on a much stronger footing. Obviously, I think we'll have a relook at the end of this calendar year on how the external environment is probably behaving, and then retweak our portfolio to a certain extent if certain conditions are probably coming into the limelight as far as the external sector are concerned. But at this juncture, I think domestic sectors and domestic economy expected to do well. Now, within the segments itself, if you probably look at the consumption patterns expected to improve because of the tax cuts, you see a large plethora of the taxes is going to happen for income earners below 15 lakh. So whatever they were spending in terms of tax, I think a large part of that pool might get spent and a large part of that pool might get saved as well. So if you presume a large part of that pool getting spent, it will get into those basic essentials that are probably needed to improve their lifestyle to a large extent, which has been lagging, honestly, for the last few years. So whether that's basic FMCG companies, whether it's basic consumer staples, whether it's footwear, whether it's apparel makers, which are uh, priced at a very good entry point, I think those consumption patterns will go up very, very strongly. Certain pockets of urban consumption have held on, and with rural consumption expected to come back strongly, I think a large part of this pool that I'm talking about might improve. So there are a whole host of domestic companies that cater to these sectors as well, which I might actually benefit as we head into this financial year. So the first half of this earnings season, as I mentioned again for the sake of repetition, might be consolidation as far as earnings is concerned. As we get definitive signs in terms of all these factors put together, the second half might probably see volumes, pricing come back strongly for a whole host of these sectors within the domestic markets.
Fair point. Now, ladies and gentlemen, you have the broad macro understanding that Mayuresh is working on. Let's look at sectors, and now let's look at individual stocks, Mayuresh. What do you like given the background that you've mentioned within the domestic space?
So I think let's go sector wise, right? So if you look at agrochemicals or fertilizers as a sector, a large pool of expectations is that Rabi has been good, so there has been a good element of volume growth happening. There is expectations of normalized monsoons,
Yes.
and normalized monsoons happen. The next Rabi season is expected to be good. So the expectations of volume growth as a base case scenario expected to remain extremely strong and steady. Farm gate prices, which means ultimately the end product prices, are extremely strong. There is decent budgetary support that has come through. There is decent support in terms of the fertilizer subsidy that has come through, which has reduced working capital requirements for the industry as a whole and for the end user itself. And last but not the least, I think the input costs that is probably needed for the industry as a whole are extremely stable. So I think if you look at the balance sheet construct, volume growth reflected in better top line numbers, stronger and better EBITDA margins reflecting in better bottom line numbers. End of story, right? So I think a sector which can give you consistent earnings growth reflected in our EPS and RS ratings. So something like a Sumitomo Chemicals, as an example, which has a very, very strong balance sheet and earnings pedigree, where the EPS rating, the RS rating has remained extremely resilient and expected to do so. Paradeep Phosphates, which is getting into the backward integration for ammonia and phosphoric acid as we speak. Very, very strong balance sheet from a leverage perspective as well. Or even something like a Coromandel International. I think these stocks have shown resilience even in the market fall, and with expectation of strong earnings recovery, might continue to remain. So,
Okay.
one, sorry.
No, please continue. I was just about to mention Coromandel International has just purchased a smaller player, NACL Industries.
Yeah.
Maybe that is something that is going to benefit NACL more. The stock has doubled in this spain in the last 10 odd trading sessions. We'll take that discussion a little later. But okay, so three stocks in the fertilizer space: Coromandel, Pradeep Phosphate, and of course your erstwhile favorite Sumitomo Chemicals. This is also the expectation of a good monsoon that has come in yesterday.
Yeah.
So these will be beneficial. I request the PCR to kindly fire the longer term charts of these three stocks so that viewers can see the correction that has come in over the last 6 months. It's the relative margin of safety. What else can be said? So Paradeep is actually up in the past 6 months. Wonderful. Let's look at Sumitomo Chemicals. This is a Japanese giant which is in India. 6 months, wow, still in the positive. And of course, we'll talk about the third one, which is Coromandel International. Again, higher. So, ladies and gentlemen, please understand the logic. There is relative safety, relative outperformance by these stocks against the broader market. And now the tailwinds are improving. So, these stocks need to be kept in your portfolio. Okay. Mayuresh, the second part of the question: PSU stocks have corrected substantially in the last 1 year.
Yeah.
They are all domestic oriented, very good dividend yields, good expansion in the pipeline, and of course, fabulous valuations, if actually mouth-watering valuations. How do you see OMCs against the backdrop of this fall in oil prices? How do you see other PSUs such as shipyards, given the fact that now a lot of overseas shipbuilding giants want to partner with the Indian shipyards. What is your thought process in the PSU segment?
तो selectively very very positive और हमें लगता है आई थिंक जो एक PSU स्पेस है जो इग्नोर्ड थी market correction में, it's coming back to the fore because of government policies as a combination, strong order books as a combination. You just mentioned shipbuilders, right, Chelsea? I think very interesting fact. If you look at the global ship fleet as we speak, 40% of the global fleet is more than 20 years old, and
Yes.
ideally at 25, it either gets scrapped or it needs to get recommissioned to a large extent. And therefore, shipbuilders will come back in focus for two reasons. One, either building of new ships, refurbishment, which means either the shipbuilding or the ship repair part of the business should hold up very, very well just from a global macro perspective. The second element in terms of PSU banks itself, very, very attractively placed, both in terms of valuations and the EPSRS ratings, institutional holding as we see in the. And therefore, even a leader like a state bank or a Bank of Baroda within the second rung names might actually perform well over a longer period of time. Now, it's impossible to take a call how they'll do in the next 1 quarter or 2 quarters. But over a longer period of time, I think the dynamics that are supporting the banking system and the parameters that you're probably looking at for the sector as a whole, extremely well placed as we speak. Again, larger plays as far as the power sector is concerned from the PSU universe standpoint, very, very selective here as well, because the government capex expected to continue thick and fast. They are hell-bent on their target of 500 gigawatts in the next 7 to 8 years. Thermal additions will happen. And therefore, selectively, I think stocks within the spaces might do well. I think an outlier can actually be a stock like a BHEL, right? Because it's not just into critical equipment that it supplies for turbines. It's also into the FGD play, which is a huge market over the next couple of years. And it's getting into super critical projects as we speak. It might have underperformed, but I think it might actually turn out to be a dark horse over the next 2 years.
Fair point. So these are the unusual thought processes that Mayuresh is coming up with. BHEL, Bank of Baroda, yes, that's a very, very interesting play. And if you look at the 6-month chart on Bank of Baroda, the correction hasn't been much, 2.3% lower. It's pretty much where it was, and now the tailwinds improved dramatically. Mayuresh, there is one more thought that is running within the mind of the Government of India, opening nuclear power production to the private space. 2 or 3 beneficiaries that you can think of in terms of equipment suppliers. We don't know when the final output will come, but plants will be set up. Therefore, nuclear power ancillaries will do well.
They should. But again, I think, Chelsea, it's a very long, drawn-out process. I think it's easy for orders to come through, for them to construct, have it commissioned, and then probably ensure that revenues come in. It's a long period of time. So I think the announcements are well taken. But my own sense is that we'll just wait and watch at this juncture on what developments probably take place, because they are extremely heavy capex projects and with very long timelines to get executed. So let's see how this probably develops. But yeah, I think keeping this on our radar as well.
Fair point. So we've discussed the valuation structure of PSUs, something on the fertilizer space that Mayuresh likes good, and of course the broader themes that are working in terms of the PSU banking and the power goods space. Mayuresh, summer is peaking in Delhi. In fact, February was how should I say, the least cold in 5-7 years, and March and April have been well above the average temperatures. Any thought that you would have on domestic power producers and maybe Coal India? The reason why I ask is zero impact on tariff, right? Growing demand, valuations that have turned superbly attractive, good dividend paying companies, predictable profit and sales stream. Any view on the power producing segment?
No, so that should continue doing well. And I think we should be hitting peak power demand as we speak over the next few weeks across the country. And therefore, I think, as I said, power as a space, the macro big picture argument continues in favor of these companies. coal is not going to go off anytime soon
Yeah.
because I think as the renewable additions happen, it's going to take time. And therefore, the argument that you put for Coal India as an example, I think the markets will realize that, right? Because if this tariff wars continue, I think they will be looking at inward sectors. Coal India least gets affected by whatever is happening across the globe. And with power and consumption expected to go higher, the expectations in terms of blended coal realization, specifically e-auction rates, will be seen. It still contributes to the overall blended realizations. So yeah, I think the momentum in coal might actually continue. But a player like an NTPC, as an example, which is having a mix in terms of renewable additions as well as thermal additions expected to continue, regulated ROE is expected to remain extremely stable in an environment where there is doubt whether earnings will actually grow in the first place itself. Makes it a good base case scenario that these stocks can actually be looked at. And yes, I think the kicker in terms of dividend yields also acts as a support for all these stocks.
In your opening remarks, Mayuresh, you mentioned the outlook on fourth quarter earnings simply because of a low base and maybe a couple of mild positive tailwinds. What are the outperformers that you are looking for in terms of individual stocks?
Again, as a space, I think what our belief is looking at the EPS ratings, I think hospitals as a space within the healthcare domain should actually continue doing well. Decent numbers reported as far as Q3 is concerned, and they should still continue showing a decent show as far as Q4 is concerned. Again, one sector which is largely unaffected by whatever happens across the globe. The healthcare delivery system is largely underpenetrated as far as the organized players are concerned. They are having an asset-light model in terms of bed additions. A large part of those bed additions have happened over the last few years. So incrementally, I think as they start generating more revenue and utilization levels in terms of bed occupancies improve, that leverage acts as a kicker in terms of earnings going forward as well. So every passing quarter, you'll probably see earnings probably improving, key parameters probably showing resilience. And therefore, I think hospitals within the healthcare space should have resilience in earnings trajectory as far as Q4 is concerned. Again, just as an addition, I think FMCG companies, though we speak of them as defensives when such conditions happen, Q4 should remain extremely soft for a large pool of FMCG companies, Shell sir. And therefore, if one expects that Q4 should be a game changer for FMCG, I don't think so. I think FMCG might have some element of respite happening from Q2 of this financial year. But yes, I think selective stocks within this space should be kept under management.
Okay, I'll request the PCR to kindly show the 6-month charts of Apollo Hospitals, Narayan Hirdalaya, KIMS, maybe even Indraprasth Medical, and there are several other mid-cap hospital stocks as well. Mayuresh, mark my words, in the next 1 year or so, you will get a cap on medical costs that private hospitals can charge. The average revenue per operating bed of any private sector hospital is rising faster than the stock price, if that is possible. And there is a government intervention due. We have seen that happening in cement in 2007, 2008. We have seen that happen in any number of sectors that the government looks at with a jaundiced eye, focusing on the consumer, and medical costs are the ones which are right there on the bullseye. ये होगा, सिर्फ टाइम दीजिए सरकार को. They are coming out with a list कि you cannot charge more than this. Be that as it may, but that's a good space to look at within the hospital sector. Now, Mayuresh, let's talk at the most painful part, which is the IT sector.
Yeah.
It's just been trashed to oblivion. Let me just check the Nifty IT index on a weekly chart. I'll request the PCR to kindly file it. It's below 200 week moving average, यानी कि 4 साल के लो पे है, मतलब 4 साल के average price पे है. This was last seen in August 2023. Mayuresh, a very blunt question, is this time to get into IT?
नहीं, बिल्कुल नहीं. और अगेन आई थिंक हमारी पर्सपेक्टिव बहुत सिंपल है कि जो गिरा हुआ है कोई गारंटी नहीं है कि और नहीं गिर सकता.
Yes.
There are various reasons where there are still concerns which are emanating for the sector as a whole. ट्रम्प क्या करेगा नहीं करेगा पता नहीं, कॉर्पोरेट स्पेंडिंग कैसी होगी पता नहीं, क्या ऑर्डर बुक मार्जिन से आएंगे पता नहीं, क्या प्राइसिंग मेंटेन होगी पता नहीं. क्या utilization levels bench strength पे maintain होंगे पता नहीं. So if a large part of your questions that you are asking yourself के answers पता नहीं है, तो मुझे लगता है I think that uncertainty is something that should not that uncertainty should not let you get into this sector in the first place. दूसरा, क्योंकि एक सेक्टर बहुत ज्यादा गिरा हुआ है, पिटा हुआ है, वैल्यूएशंस अच्छे खासे कॉन्ट्रैक्ट हो चुके हैं, इसलिए अट्रैक्ट हो जाता है, इज नॉट द ओनली थीसिस दैट यू वर्क आउट इन द मार्केट्स इटसेल्फ. तो हमें देखना पड़ेगा. आई थिंक वील हैव टू वेट एंड वॉच हाउ Q4 earnings are. Frankly, I think I will look out for management commentaries. And it's not just for local companies, domestic companies, sir. What our thought or our process approach is, at least as Q4 is concerned, we'll be tracking a lot of IT companies, which we do in the US, outside the US, outside India. Take a holistic view in terms of what the management commentaries are going to be across product and platform companies, and then probably take a call on what consensus is coming out as a thought process for the macro picture, how managements are perceiving the environment and a micro element as well. So मुझे लगता है I think काफी ifs and buts है इसमें. So I think थोड़ा wait and watch करें. Let's see how the Q4 earnings play.
Okay, with that, Mayuresh, thank you so much for this wonderful chat that we've had after a very long time. I'll make sure that we make good quality reels on the stocks that you've mentioned, which may perform in the next 1 year or so. And here's looking forward to hosting you in Delhi.
Sure, sir. It's always a pleasure being on your show. Always a pleasure seeing you. And if you come to Mumbai, I think more than happy to meet you.
Of course. Get ready for chole bhature.
Absolutely.
Among other things.
And vada pav in Mumbai.
With that, ladies and gentlemen, we'll call it time on this wonderful conversation. Thank you for being tuned into Business Today Television. There's a lot that's happening on the other side of this break. Stay tuned. Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. Today we discuss some of the quality investments that are available to you at fairly reasonable prices, especially those compared with 6 months ago or 1 year ago. As usual, this is not an invitation to buy or sell.